Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%.
Don't you want somebody to love? Don't you need somebody to love? Wouldn't you love somebody to love? You better find somebody to love.
Welcome to Market Makers, everybody. Happy August, everybody. That was the new Fed head, Kevin Warsh, featured in our intro. He absolutely made the media in Wall Street's brains explode after that press conference. They crashed out hard. They're still crashing out today, saying the Fed lost all its credibility. Oh my God, now they have to keep raising rates. Let me explain to you because they don't get it. They don't understand. Kevin Warsh, his professor was literally Milton Friedman. Kevin Warsh is letting the market set the rate. That's why you saw the 10-year, the 30-year, you saw rates rise because the market is setting the price of what it thinks rates should be. Warsh has two tools to combat inflation. He can raise rates or he can sell off the Fed balance sheet. That's it. Raising rates will do nothing to lower the price of oil. Raising rates will not change that at all. So what raising rates does is causes an unemployment spike by design, putting millions of people out of work as small businesses, which is 80% of the economy, cannot borrow money. Large businesses, rates go up, they do layoffs. So you spike unemployment, putting millions of people out of work for a supply side issue, a logistical issue on oil. How do I know it's largely based on energy, this inflation? Because if you look at the 3-month trend in housing, which is the largest weighting in the CPI, it's been in a deflationary trend for the last 3 months. If you look at the last two prints, being the PCE as well as the CPI, both were deflationary prints. The first two deflationary prints since 2020. Raising rates would do absolutely nothing. There's no such thing as Fed credibility. Raising rates is the absolute wrong move you could possibly do. Warsh knows that. He left rates alone, and he's not telling you what they're going to do in September, and they're furious about it in the media. So let's talk about the price action, because as you guys know, I've made a bunch of predictions here on this channel. If you've been watching us since April 2025, let's walk through some of them right now, and I'll tell you exactly where I think price is going. And I'm just uber bullish about the setup going into the next 2 years, guys. But we're going to dive into that. Everything is timestamped below. Be sure to like, subscribe. If you have a hype button, click the hype button. I would appreciate it. You want to trade these markets and support us? Open up the video description. Check out Bitunix, SimpleFX. Would love to have you guys on those platforms, be a Market Makers VIP. And of course, if you want my deep dive videos I do throughout the week, Ricardo's Block State updates, click the join button right there on YouTube, and you can jump over to the Discord as well. Let's start off on the S&P, the largest market in the world. April 2025, tariff derangement sell-off. Remember, this is the first time Paul Tudor Jones, billionaire, a lot of other people came out and said, market's going down 50%. What I was able to do vis-a-vis Fibonacci, the math in the marketplace and the market cycle, within 3 days of the bottom, within $12 of the bottom, I gave you the bottom, shared my longs, and I gave you two upside targets. The bull case of 7,000, which we hit, and the max bull case of 7,500. Now, as we walk through this was a 46% rally to the upside. 2,200 S&P points. To put that in perspective, that's roughly 6 years of gains that you got between April of 2025 and February of 2026. 6 years of gains. Massive. 46% rally. Strongest turnaround rally in history. And then what happened, guys? We get to 7K. We get to 7K come January. We start having issues with Iran. Come March, we get the pullback in the S&P. And then the bears came back out. This is those videos that you saw. The S&P will not make a new all-time high for 20 years. It's going down 50%. The Nasdaq's going down 75%. Bitcoin's going below 10K. These are the procrastinations. I played it for you on an intro. Showed you a bunch of different thumbnails from a bunch of different people telling you that back in March. What did I say? We're going to 7,500. We're going to complete the max bull case. We rallied up in the strongest rally in 40 years to get to 7,600. And then the bears came back out again. This is like Goldilocks and the Three Bears. Oh my God, the Iran thing's never going to end. Now the market's topping. I've been calling the top since October of 2025, but today's the top. Now the market's topping. Now you're going down 50%, the NASDAQ 75%. They all got trotted out back on YouTube. And I'm giving you this diatribe because I want you to understand how market psychology works in this space. 80% of people lose money trading, and you're seeing the reason why if you look at the thumbs and the belief systems that people have. Absolutely incredible. What did I tell you when we got up to 7,500? I told you at 7,000, we're going to 7,500. What did I tell you at 7,500? We got to go to the other screen so you can see that. When we got to 7,500, for the last 2 months, I've been sharing this fractal with you guys since June. I said the fractal perfectly called the top at 7,500. Then you get a pullback, right? We got the top, we got a pullback, we got the top at 7,600, got a pullback, just a couple of percent. And now you're breaking out. And what did I tell you the next level target was? 7,800 to 8,000. That's where the fractal predicts a top and then a 10 to 13% retracement. Well, guess who went on TV today on CNBC and literally said the exact same thing? Lee, roll Mr. Tom Lee.
So I think the markets could actually rebound strongly this month. Like maybe we get to 7,800.
This month, the 7,800.
Yeah, for the S&P.
Is that forecast for the 10% drawdown still intact?
Yes.
It is?
Yeah, so...
Can't you take that off the table? Just will you do it for me? Say it doesn't have to. No, I'm kidding. So we get to 7,800, maybe a 10% drawdown, and then close the year above 8,000.
Yes. Yeah, I think because as we start to look at 2027, there's a lot of the clouds that are heading this year kind of lift. You know, the SpaceX unlock will be behind us, and the market testing of the new Fed will be behind us. So I think, and then of course there's already been a leverage unwind. So I think 2027 could be one of the best years for the stock market.
And you think?
Just thought that was hilarious. Literally the same prediction I've had for 2 months now of rallying the 7,800 to 8,000. Then you get that retracement. You're in the retracement now, the pullback. You're about to break out of it. All you got was a 3.5% drop in the S&P. It's all going back up on the S&P, 7,800 to 8,000. And Tom Lee is absolutely correct. And how often do you hear me say that? Almost never, but a lot the last year. But Tom Lee's correct when he says the best year of the stock market may be 2027. Guys, I continue to say this. Look, I participated and traded in the bubbles, the two biggest bubbles in the last 25 years. I was trading in .com. I was trading commodities in .com. In June 2007, I joined Merrill Lynch right before the GFC. This market cycle will end in a bubble. Let's put that to rest. My thesis is, and I believe this will be 100% correct, that bubble is going to run out into 2028 with the presidential cycle, the 4-year cycle, the Shemitah cycle. That all hits at the end of 2028. You have 2 years of epic gains. And to put this in perspective, we are in 2026 and winter 1996. Alan Greenspan came on TV and said the market is irrationally exuberant. It could form a bubble. What happened to the NASDAQ after Alan Greenspan said that? I think it was December 96. The NASDAQ went up 500% in the next 3 years. You're in a bubble, but there's a lot more inflation that's going to happen in this bubble, meaning the bubble's going to get bigger. You are so early in this cycle. You will have generational gains in 27, 28. The S&P will be above 10K. Bitcoin's going to be above 200, 250K, and it's going to be absolutely epic. You should be excited.
I wanna rock right now. I wanna rock right now. I wanna rock right now. I'm Rob Bass and I came to get down.
That's how I see this market cycle playing out, guys. And this fractal is playing out beautifully. Right now, as I'm recording, we're 25, 30 bucks away from a new all-time high on the S&P. So again, absolutely epic. How's this going to play out? Let's look at our clean chart here on the S&P. We already know the fractal's telling you 7,900 is its prediction that you get to. Fibonacci's telling me 7,869, 8K. That's where the S&P should top at. Then we're looking at a 10 to 13% drop. Where would that most likely drop you to? Right to 7K ceiling. What happens after that? Is the market collapsing? This will coincide with the fall equinox, the bottom, September, October, the 3 weeks surrounding the fall equinox. It will coincide with if the Fed surprise raises rates, something else. And this is all going up. The midterm election cycle, after you bottom, it's going to explode back to the upside. Next target would be 83.21. You should finish 2026 above 8K. That's your direction of travel. You don't have to believe me. That's fine. Been long this whole way. Shared my longs with you back in April 2025. This is the trajectory I believe we're going to continue with. Let's look at the S&P here on the daily zoomed in. Cross 76.25 and you've made a new all-time high. There's your targets right above you, 78.69. 8,020. If you guys want a deep dive in the MAGs, the MAG 7, the chip stocks, check out what we have to offer. Click the join button because I'm going to be doing that tomorrow for members in a series of videos. If we look at what's happening in the, the Dow. So you guys remember since March, I told you we should rally into July like we did the last 3 years. I saw a couple of people say, oh, good call on the rally into July. We didn't make a new all-time high. Well, that's correct. We got within $25 in July of a new all-time high. However, the Dow made a new all-time high. The equal weight made a new all-time high. As a matter of fact, we just had the worst July in a decade. Do you know what that means? Does that mean the bears won? The worst July in a decade on the S&P means the S&P finished 0.1% lower. 0.1%. That is 0.1%. Okay. That's the worst July that you've had. You're going up here in August to hit those targets, but it means different things on different indices. And that's what you need to understand. If the Dow can flip 53,502, which is only 450 points away from, you made a new all-time high. Watch the Dow at 54K. It's going to be a key number there on the Dow. Watch it at 54. Look at it's adhering to the fibs. It has played out beautifully. So watch that number. If we look at the RSP, came right up to the target of 216, perfectly hung up right there because tech has the largest bid in it right now since the pandemic low, according to Goldman Sachs. That's why you see these things ripping higher. Equal weights taking as pause right there at 216. If we look at the SOX, what does that mean on the SOX? If we continue this rally into August till the S&P gets to 7,800, 8,000, what does it mean on the SOX? Well, you got to look at the screen, and being a pattern trader, you forecast with patterns. Does that mean this is definitely going to play out? No, but this is what I see happening. The SOX should rebound. I'm looking for this rebound. You're at 11,350. You should come up to 13K, somewhere in here between 13 and 14K. And this is going to be the key level in the kill box. There's your all-time high. If you fail here and break back down, that's going to be the retracement in the SOX again. And then it's going to be about, do you break that neckline or do you hold it as support? 10,000 will be a key level on the SOX, but the near-term trajectory into August is higher to come back up to resistance. Wave mechanics, the market acts like a rubber band. Big wave up, parabolic sell-off, you get a reflexive rebound, and it all comes down to resistance. And if you can flip that resistance, you go up, make a new all-time high. If you fail, you come down and you retest that neckline, and if that breaks, you got deeper to go. How does that translate here to the NASDAQ? Same thing. Look at the double top possibility. NASDAQ came right up to target, 29,553. Again, was calling at 30K. We almost got up to 31K. That's the near-term trajectory. This is a weekly time frame on the NASDAQ. Watch anything below 31. If it fails below 31, the NASDAQ's making a double top. Does that mean it breaks down and it's collapsing 75%? No. A lot of double tops fail, guys. You get a double top, you come back down, and maybe you retest the neckline. Now, if the NASDAQ does a deeper retracement, where would it go? look at your market structure, because remember, the S&P is probably going to retest 7K when it does a full correction. A correction is 10+%. 10 to 13% is what I'm looking for in the S&P. So I would be looking for the NASDAQ potentially 26.2, and you come down here to your low, 23.5, somewhere in there, 26.2, 23.5. If it breaks that neckline, it bounced right off the 18 weekly RMA. Watch for this double top to form, because it doesn't have to break that neckline. It can come up, fail, come back down again, chop around, and then people will start telling you, oh, look, it's making a symmetrical triangle and it could break up or break down. I'm telling you this stuff before it happens, because this is how patterns form, okay? So that's what you're looking at on the NASDAQ. NASDAQ on the daily, you can see the exact same thing. If we pull a fib from your all-time high, let's get some retracement levels, because the obvious retracement level is going to be 618, 786 to form your kill box. 29.4, 30K. That's what you need to watch on the NASDAQ. That's your key level. You're going up to test this level. If you can flip 30, bias, mathematical bias is you're making a new all-time high. If you fail and then you get that retracement with the S&P, then you're going to be retesting. There's your 90-day RMA right there. You're going to be retesting that neckline on the NASDAQ. And then if it breaks, you go lower. If it doesn't, then you consolidate and then you break back out, because the most bullish time in the cycle is right after the midterms. You look at November out to the summer, average gain in the NASDAQ is 30%. Average gain in the S&P is 20+%. By the way, that data, NASDAQ data goes back to the 1970s when it was created. S&P goes back to the 1950s. This is a super bullish time in the cycle once you get the settling and once you get past that midterm election. Let's continue to click through here. Remember, I told you the last few weeks, this looks to me like it wants to break to the upside. What's the Russell doing? Breaking to the upside. Same exact pattern. Watch the Russell just like you need to watch the NASDAQ. If it fails under 3,000, 3,050, look for it to chop, and then you want to watch if it breaks back down, okay? If it can break up above 3,050, targets on the Russell, 3125, 3172 would be the upside targets, and then it's all going to be about if you top or not. If you do top, first target to the downside is you need to hold that neckline right there at 2,900. That'll be key, or else you get a deeper retracement. We'll cover that in future videos because we're already like 16 minutes in. What about the DAX? I've been tracking this for you guys for months now. You look at the DAX, higher highs, higher lows. I told you for weeks it was going to break out. It's breaking out. And guess what? The targets I gave you, a couple months ago, 26.4, 27. That's where the DAX is going, and that's where you need to watch it, because if the S&P gets to 7,800, 8,000, the DAX will top. The DAX will retrace with the S&P. We'll go over those levels when we get to them. Support now at 25.5. Key support because you broke above your all-time high. Actually, you're at an all-time high right now in the DAX as predicted. So if we look at what we got, let's jump over to cryptos. Bitcoin. What's the key level on Bitcoin? Again, I see a lot of arguing on, I don't really participate in that stuff. I don't care, right? I really don't care what other people think. But a lot of arguing in the crypto space. Is the bottom in, or are the incels correct with their wet dream that Bitcoin's going down to 25K and it's going to sell off for another 9 months? Is that correct? Guys, let me show you, just looking at the chart, what I see. And I've showed you guys this for a few weeks now, the 108 RMA, okay? I know I'm not trying to beat a dead horse, but it's very important to understand this because that is sitting there right at that 67K level. Why is that even significant? You can see you're bouncing up. You've hit it twice. If you break above it, these are your upside targets, 73 and 77K. If you can hold above it, you will not go back below it, okay? So that's the key takeaway. Why is that important? How can I say that with any conviction? Where you are in 2022, here's the 108 RMA. I think you're right here, right? If you're going to use this as a parallel and analog for where you are, you're right here. You're testing the 108. Notice when you finally broke above it, you never went back below it, and you went on a 100,000 point rally in Bitcoin. Now, if you are right here, notice what you did was you tried to break above it twice, and then you went on and retraced 23% to the downside. And if we do that in Bitcoin, it's key to consider where the levels are. I'm going to show you that here in a second. So this is what the game's about, flipping the 108. If you can get above it, hold above it on the weekly, got to retest, boom, 100,000 point rally to the upside. Is that a one-off? You did the same thing in the pandemic. You got 2 candles below it. Once you got back above it, you went on a massive rally of roughly 60,000 points, 100,000 point rally, 60,000 point rally. You did the same thing back in 2019, multiple candles below it. Once you got above it and held it, 260% rally. So for me, that will be the key signal whether or not the bottom is in, is if Bitcoin can flip the 108 RMA. What about if it can't? What if we are right here where you're testing the 108 RMA and you are going to get this pullback? This last drop was 23% before you went on. And this is possible, especially if the S&P goes up 200, 300, 400 points, tops, and then does a 10 to 13% retracement. Remember, you have to remember when the NASDAQ and the S&P top, you're talking about trillions of dollars when you talk about corrections and retracements, right? So understand that. But what could that mean? So again, people have different targets. I use Fibonacci for mathematical levels in the marketplace. If we flip the 108 here on the weekly and hold it, the key levels are 73 and 77. This isn't anything new. I've been telling you guys this for months. If we fail at the 108, does that mean we're going to 10K? The way I look at this is if we fail at the 108, most likely when the market's correct, you can flush out for a new low. The key level to watch is 50K. Why do I say that? That was your low over here. See that one big deep wick right here and that correction back in 2024 of guess when? August correction 2024, you flushed out to 50K, right? So if you cannot flip the 108, watch for a flush out once the market's top and correct, okay? Watch for a flush out to 50K. So that's how I like to do this. You already went to the 618 at 57K. Remember, that's the low of 15.5 all the way up to the all-time high. This is the most commonly retraced to fib. I don't anticipate Bitcoin spending a lot of time down here. And if you do something like this, it could literally look like what you did in 2024 in August, a big wick down, power wicks back up, and you get this same type of recovery back to the upside. So this is what you want to watch on Bitcoin, in my opinion. If you lose 57, make a new low, watch 50K. I think that's the cardinal level you need to pay attention to. And that's only if we do not make more progress to the upside, because right now we're just banging our head. So we'll see if we're repeating 2022, testing the 108, get one more flush out. By the way, what would that drawdown be? We did 22% after testing the 108 back in 2022. Look at that. If we came back down to 50K, it's 25, 26%. So again, you get a lot of symmetry in the marketplace. Let's continue on. If we look at Bitcoin, again, the big thing is flipping your trading range, which is 67. If you can get above this, hold above it on the weekly, then the bottom should be in. If you can do that on the weekly time frame. Right now, you have your trend line, Bitcoin 63.8, not a massive recovery off 57. But again, when you look at it cyclically, it makes sense with how the S&P is lining up. So if we can get above 67.3, 73, 77, those are the two targets to the upside, but you got to do it, right? Because remember that 108 RMA is literally cutting across here on the weekly. It's cutting right across there, and that's where Bitcoin failed here and failed here. It needs to break above that, hold it, and you can get higher. If not, watch for the flush out after the S&P tops. Near-term direction, though, in the markets is higher. You look at Ethereum, what does that mean? You're on top of your trading range, beneath your trend line, 1866. Ethereum got to the first level target, 1983 at 50% fib. If Bitcoin can get up and rally, Ethereum needs to flip 1983, then you got 2100 and 2250, right? We don't know. We got to see what kind of lift you get. You see the dichotomy in the marketplace. I mean, you saw the stocks, you saw tech, the big sell-off. NASDAQ went down 10+%. S&P just did a little pullback, and now they're all rebounding. So we got to see if Bitcoin can exit the trading range. That is the key thing to watch. Right now to 1865, key support level on Ethereum is going to be 1800. Watch 1800 on Ethereum with any more downside. If you get it, like to see a pop up, retest 1983. Would love to see a pop up to the 618 at 2100. That would be fantastic. If we look at Solana, look at your downward angle. Again, near-term direction, I believe on Solana is going to be higher. Now, Solana hit my first level target, my first rally target, which I gave you back when Solana was $62. We got to 83.71, right? We got our beautiful W pattern, got to 83.71. Can we get higher? This pattern is literally the same as the SOX and NASDAQ. Look at your Solana pattern. Not parabolic, but wave up, wave down. It's going to be about, can you flip 83.71? If you cannot and you top, then you need to watch that down leg on Solana to see if you hold that low at $70, right? If this breaks out, which I anticipate the move will be to the upside, because to make a double top, you got to get that reflexive rebound. But if it breaks out, can flip 83.71, $90 was my next level target. Guys, hope you enjoyed this video. I hope to see you on the Discord, and I'll see you on the next one. Have a fantastic week, everybody.